If I ask you to name a metal that is money, you would say gold. If I asked you to name a mineral that is technology, you would say silicon. But there is only one element in the universe that is both. Welcome back to Know Things. Today we are decoding the white metal silver. For thousands of years we called the silver poor man's gold. But now that becomes a joke. Silver isn't just gold's cheaper cousin. At present, it is the most schizophrenic asset on the earth. It is the only metal that is living a double life. It is indispensable to the industry and also hoarded as money. Today, we are going to break down what makes silver very precious. To decode silver, you need to understand one weird fact. Mining companies don't really look for silver. Roughly 80% of the world's silver comes as a byproduct. Actually, it's an accidental bonus found while mining for copper, zinc, and lead. This creates a massive economic glitch. On the other hand, there are vast applications of silver. If the price of silver triples tomorrow, miners cannot just mine more silver. They are mining for copper or zinc. Consequently, the supply of silver doesn't react quickly to the change in demands. This causes the demand supply mismatch and higher price volatility. Why the demand? Silver isn't just a metal. It is a technological asset due to its three physical properties. It has high electrical conductivity, high reflectivity, and high thermal conductivity. So it is used in photovoltaic cells in solar energy industry. It is the most reflective metal in existence. So it is used in telescopes, high-end mirrors for space technology, and due to its high thermal conductivity, it is used in electronics and engines to prevent overheating. In medical field, silver use is oligodynamic. It is used in dressings, in making surgical tools, in water purification, and to prevent infection without using antibiotics. This supply-demand mismatch creates a massive economic glitch. Let's imagine the price of silver triples tomorrow. Logic says the miners should mine more and more, right? But that is not possible. They are mining copper, they are mining zinc or lead. If the world doesn't need more copper, you don't get silver. And where is the future supply hiding? If we look at the reserves, that is the silver still left in the ground, the map is surprising. While Mexico produces most silver today, the real unmined vaults are elsewhere. The country Peru sits at number 1 and followed by Australia, Russia, China, and Poland. Poland is on the list almost entirely because of its copper mines. So, the destiny of silver is tied to the destiny of other minerals. So, what do you think? Should you sell your gold and go for silver? Not so fast. If you see financial world as an ocean, gold is like a cruise ship, usually stable, slow and safe, while silver is like a speedboat. It goes fast, but it capsizes easily in rough waters. Here comes the factor of risk. Gold is a fair asset. Typically, when economy crashes, people buy gold. It's like a gold standard. But silver is different. There may be a time when economy crashes, industries close, factories shut down. Since more than 60% of silver is used in industry, the demand disappears and the price crashes. This tug of war makes silver highly volatile. If gold price fall about 1%, silver will often drop more than 3 to 6%. It is not a safety net. It is a speculative rocket. But in the present day scenario, the price of silver is rising high and high. That means the demand is more and more than the supply. So who is buying up all this supply? If you look at the global leaderboards for silver imports, traditionally the leading silver buyers are United States and Hong Kong. These are followed by UK and China. But recently one country has surpassed all of them, emerging as the global leader and the most aggressive buyer of silver on the planet. That is India. In the years 2024 and 2025, India smashed all the import records. Silver is no longer a dead asset sitting on the ankles. Starting April 26, the Reserve Bank of India is standardizing silver loans, just like gold loans. This could be a game changer. For decades, rural India held tons of silver in their households that couldn't be monetized. But now, banks will accept your silver jewelry and coins as a collateral. So it's going to become a bankable monetary asset. Indians are buying more and more silver because now they know that they can leverage it for credit. So, how do you invest in something this volatile? You use the volatility to your advantage. Do not buy fixed weight, you buy fixed money. Rather than buying 100 grams a month, you buy 5000 rupees a month. This is called cost averaging. So, when silver crashes, the price is low and your 5000 will buy more units of silver. And when the price is high, you may get less units of silver. On an average, you are in between. The cheat code, you automatically buy the dips. And when do you sell? This is where the gold to silver ratio comes. This ratio is the number of ounces of silver it takes to buy 1 ounce of gold. If the ratio is above 80, silver is cheap. You just buy. If the ratio drops below 40, silver is expensive. You sell it, or rather, you can swap it for gold. If the ratio is in between, it's like neutral. You can hold on to the silver. This is how pros trade. Use silver to generate wealth, then move it to gold and preserve your wealth. Finally, a quick warning on taxes. In India, if you buy physical silver, you pay 3% GST outright. That means you are at 3% loss on day 1. Additionally, there is a waiting period of 24 months for your short term capital gains to turn into long term capital gains. If you buy ETF, there is no GST and the waiting period is only 12 months to turn your short term capital gains into long term capital gains. So, mathematically, if you are investing for profit or liquidity, ETFs win. Silver was once in the form of coins in the ancient history. Now it is in your solar panels and other electronics. Yes, it is volatile, risky, and frustrating, but that's exactly why it offers the opportunity that gold will never will. After all, high risk, high returns. But remember, do not put all your apples in one basket. Always diversify. If you found this episode helpful, please hit the like button and share so that the algorithm knows that you are willing to know something. I'll see you in the next episode of Know Things. Thank you.